Hi viewers, in this video I'm going to show you how to prepare the cash flow statement of Batty Ltd. And the requirement in this question is just to calculate the operating activities, which is the top part or first part of the cash flow statement. Right, so I will write the full name of the statement, which is cash flow statement. Batty Limited for the year ended 30th of September 2009. So the first heading will be cash flow from operating activities. I'll have a pound sign here and another pound sign here. And I'll be starting my question from profit from operations. That means it will be starting from here. That will be my starting point. If I was starting from here, then I have to deal with the finance cost, which is add back this finance cost into 25,500, and later I had to subtract the finance cost paid. So this is my starting point. So 26,000 has not been affected by the finance cost and the tax. Profit from operations, and that is 26,000 pounds. Add and less. So straight away we need to add back the depreciation which has been subtracted from the profit. And that is 17. Well, this is 1,000 and this is also 1,000. So that is 17 million. What else we need to add back? Well, there is profit from the sale of non-current asset, which is 100. And that was a profit. It's a notional cash, and then it's a notional profit, sorry, which has been added in the income statement. We need to remove that. So what I'm going to do is I'll just move this to save some space. Profit from the sale, from the disposal. And then I'll have to deal with the inventory and receivables and payables. So you can see that the inventory is going up. So from cash flow point of view, it is a negative cash flow. Increase in inventory, which is 40 million minus 38 million. That is 2,000. Looking at receivables, receivables are also increasing. That means I'm not collecting money from my customers. Increase in receivables. 27,000 minus 26,500. That will be 500. Looking at the payables, the payables are increasing. So from a cash flow point of view, it is a positive thing because the money is in my pocket. I'm not paying my payables. $22,000 minus 21,900, and that is 100. So we need to calculate cash from operations. And that is 26,000 plus 17,000 minus 100 minus 2,000 minus 500 plus 100, and that is 40,500. Now we need to subtract the interest paid. In the question, the interest paid is 500. And tax paid. So you can see that in the question we have an opening balance of tax liability, which is 800, and then we have a closing liability of 1,000. So if I open a T account, the opening balance of liability will appear on the credit side, brought down, and the closing balance will appear on the debit side before the lines. Statement, I can see that this is the tax that has been recorded in the income statement as an expense. So the double entry for this is income statement is debit and tax account is credit, which is 1,000. So I'm going to record 1,000 over here. And now we need to find out how much tax has actually been paid, that what was the cash outflow. So the heavier side is the credit side, 1,800. 1,800, take away 1,000, and that is 800, and this is bank. So the double entry for this is tax account is debit by 800 and bank account is credit by 800. So £800 is the amount that has been paid to the tax authority. So 40,500, take away 500, take away 800, and the answer is 39,200, and that is net cash flow. From operating activities. And that's the end of the question.